Michael Burry warning, the dollar will disappear completely. Our leaders have jeopardized the future of our nation, and our society is starting to feel the consequences of such reckless decisions. They probably thought that they could actually get away with it. They believed they could create, borrow, and spend giant piles of money without facing any issues. But of course that plan has backfired. Since the creation of the United States, there has been many governments that have surrendered to the temptation of creating massive amounts of dollars, and every single time, things have ended badly. So by now, those who are leading this country should have learned their lesson. Today we're going to talk all about why the dollar might lose its dominance soon. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. More money is not the cure for a financial system terminally broken, and they should know that by now. Those policies caused so many imbalances in our economy that, at this point, no one stops talking about inflation. On the mainstream media, the alleged specialists seem mystified that things have gotten so bad so quickly, but anyone with a shred of common sense should have been able to see that this was coming. You just need to go to the website of the agency that started this whole process, and in there, the latest data will show you that something is clearly off. Money has been created at an exponential rate. What's happening to our money supply is complete and utter lunacy. It's even worse than what happened during the Weimar Republic or any moment in history. This undoubtedly will annihilate the dollar eventually. Our leaders clearly deceived themselves into thinking they wouldn't deal with the consequences of creating money so recklessly. But things have escalated very quickly, and people have started to notice, and they're getting increasingly angrier with what they're seeing. Americans have been facing very painful inflation everywhere they go. Last week, the Labor Department reported inflation across a wide range of products that consumers buy on a daily basis was even worse than expected in October, hitting the highest level in more than 30 years. The Consumer Price Index, which tracks the price of a basket of products, ranging from gasoline and healthcare to groceries and rent, shot up by 6.2% from a year ago, the biggest jump since December 1990 and significantly higher than the 5.9% Dow Jones estimate. If the inflation rate was still calculated the way it used to be, we would already be well into the double digits right now. Estimates released by John Williams of ShadowStats.com point that if we used the same formula we used during the 80s, the official rate of inflation would be around 15% right now. And as opposed to what the Fed says, this is not going away anytime soon. In fact, it's evolving into a major national crisis as we speak. One of the components that led to this staggering surge in the overall rate of inflation is the price of gasoline. Last month, gasoline prices climbed almost 50% from the same month a year ago, the highest level since 2014. Even the president admitted that gas prices are exceedingly high and that the surge is causing a lot of anxiety in our society. As the winter approaches, Americans should brace for even more expensive energy prices too. Last month, U.S. consumers had already faced the biggest jump in their energy bills in more than a decade, but prices are going to soar higher in the coming months. In October, the price of electricity rose 6.5% from the same month a year ago, while consumer expenses paid to utilities for natural gas increased 28%, according to numbers released Wednesday by the U.S. Bureau of Labor Statistics. Fuel oil faced a dramatic jump of 59%, and costs for propane, kerosene, and firewood shot up by 35%, the data showed. If wages were inflating at the same pace everything else is, then those increased costs would be offset by higher paychecks, but that's definitely not what's happening. Economists have been warning for quite a long time that this was coming, and sadly, what we faced so far is just the very start of a much deeper crisis that will linger for decades. There's nothing the experts who are running the economy can do to reverse this crisis. In fact, Congress just passed another gigantic spending bill that will only make things worse. It's truly soul-crushing to admit, but our course has been set, and at this point there's no turning back. We're headed to the second stage of the economic collapse that started in 2020, and you can mark our words, America will never ever be the same again. The seemingly crazed idea that the US dollar will collapse against other major currencies in the post-pandemic global economy is not so crazy anymore, the economist Stephen Roach told CNBC's Trading Nation on Wednesday. Roach, a former chairman of Morgan Stanley Asia, also said he sees a more than 50% probability of a double-dip recession in the United States. He based that prediction on historical evidence, saying that in 8 of the past 11 business cycle recoveries, economic output has risen briefly and then fallen. It's certainly something that happens more often than not, he said. Roach last predicted a dollar crash in June, saying it would collapse 35% against other major currencies within the next couple of years. At the time, the dollar index traded at about 96. On Thursday, the index traded at about 94.41. He said on Wednesday that he expected the collapse to happen by the end of 2021, but he did not say by how much. We've gotten data that's confirmed both the saving and current account dynamic in a much more dramatic fashion than even I was looking for, he said. Explaining his outlook, Roach pointed to dire second quarter data. The current account deficit in the United States, which is the broadest measure of our international imbalance with the rest of the world, suffered a record deterioration in the second quarter, he said. The so-called net national savings rate, which is the sum of savings of individuals, businesses, and the government sector, also recorded a record decline in the second quarter, going back into negative territory for the first time since the global financial crisis. Lingering vulnerability and the aftermath of the initial decline are two factors driving the dollar's ominous future, he said. Lacking in saving and wanting to grow, we run these current account deficits to borrow surplus saving, and that always pushes the currencies lower, Roach said, and the dollar is not immune to that time-honored adjustment. Additionally, Roach said new COVID-19 infections and higher mortality rates must be part of assessing the risk of an aftershock. As we head into flu season with the new infection rates moving back up again, with mortality unacceptably high, the risk of an aftershock is not something you can dismiss, he said. So that's a tough combination, and I think the record of history suggests that this is not a time, unlike what the frothy markets are doing, to bet that this is different. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time.